Oh, sorry. It was on mute. Oh my God. I'm so sorry. I'm so sorry for that. I have now it's coming. Puneet, Force Wale, Salman Ika. Okay. Yeah, Yogesh. Okay. Sorry. So now with the audio, functions of RBI we are going to discuss today. Monetary policy function and monetary policy function from from 1947 to 2016, what was the definition of monetary policy? And from mid 2016, what is the definition of monetary policy? Right. So at present, the monetary policy is defined as under policy under which supply of money is regulated to control inflation while keeping growth rate in mind. Right. So growth rate is in the mind, but the target is what? To control inflation. But if you will see the monetary policy function of Reserve Bank of India from 1947 till then April 2016, there is no such kind of a thing, control the inflation. Right. To control the inflation was not precisely mentioned there. It was not precisely mentioned there, but RBI have to keep both in the mind. Keep both in mind. What? That is inflation and growth rate. Both RBI have to take in the mind while going for what? While going for monetary policy decision making. Right. But as we know that after 1991, Indian economy has seen the tectonic shift. Tectonic shift means tectonic change, right? So tectonic word is used from the geography, right? So tectonic means fundamental change in the Indian economy. So that fundamental change has bought a lot of things, right? Lot of things they have bought. And if you will see, you will find that Indian economy growth was very good from 1994 onwards. You will find that the growth of Indian economy was very nice. However, certain economists, especially Dr. Raghuram Govindrajan, Dr. Raghuram Govindrajan, he was always highlighting the issue of high inflation led high economic growth. So he was keep pointing maybe India's economic growth is rising. It's true. Continuously from 1994 onwards, Indian economic growth is keep rising. But at the same time, inflation is also rising. Rate of inflation is also keep rising, and it is at high level from 8 to 9% inflation is persistently exist in the Indian economy. And his point was ki if your income is rising, suppose you are getting right now income of 100 rupees at present, and you are getting 10% income growth, that means your income is rise to 110 rupees, but at the same time the rate of inflation also grow by 9%, right? So whatever you are earning extra, that is 110, but effectively the rise in income is only 1 rupee. So he's keep pointing this thing ki this is not a right approach. We must look towards the rise of inflation also. Initially means even initial years of after LPG reforms 1994 onwards, certain economists also pointed out this thing. Apart from Raghuram Govindrajan, like C. Rangarajan and Dr. Rakesh Mohan, they have highlighted this issue of high inflation. But it was said that yes, inflation is rising, but right now focus should be on what? Focus should be on accelerating economic growth. So from 1947 onwards, if you will see, the Reserve Bank of India most of the time is looking towards economic growth over inflation when RBI will go for monetary policy decision making, right? This is the classic stand of Reserve Bank of India over the time, giving more importance to growth in comparison to inflation. Until unless inflation is going to be too much uncomfortable situation is going to be created by inflation, they are focusing only on what? Economic growth. So this was the classic stand by the Reserve Bank of India. And when Indian economic growth was getting a good pace, means from 1994 onwards, when Indian economy was getting good economic growth rate, so RBI have the policy stance ki RBI keep putting the money in the economy so that economic growth can flourish further, right? To accelerate the economy. But Rajan, Dr. Raghuram Govind Rajan pointed out that ki now we are getting some level of economic growth, right? Initially, for example, if a person right now getting the income of 50,000 rupees, right? If a person, what was the Dr. Rajan's point? If a person is getting annual growth of 10%, right? So annual growth rate of 10%, so his income is going to be rise by 55,000 in a year, right? After 10 year, right? Every year he is getting the 10% growth. So somewhere around in 10 years, his income is going to be how much? Can anybody tell me? If this person is getting 10% income growth every year, starting with 50,000, and he is getting 10% growth every year, what will be his income after 10 years? Anyone can give me the idea? Or should I go for the lump sum kind of the thing? If anyone can give me the good idea about what will be his income after 10 years, if he is getting 10% growth. Anyone? Puneet, Yogesh? Nobody is going to give the answer. Anyone? Chalo, I'll assume after 10 years he is going to get income of 1,20,000. Just my assumption. Okay, I'm not going to do this calculation. I'm weak in mathematics. So suppose his income is going to be 1,20,000 after 10 years. The point is, after certain point of time, he is not, once his income is going to be 1,20,000, then getting this 10% growth, getting this 10% growth is going to be a little bit difficult. When the quantity is going to be rise, like our GDP is rising and rising. At a point of time, GDP is going to increase, but the percentage growth, which is at point of time, like in class example of China, at a point of time, China is having the GDP growth rate of 12%, 11%, 10%, 11%, 12%. But right now, you will see the China's GDP is going to rise somewhere around 7 to 8%. It doesn't mean that ki China is not growing or its growth rate is decreased. The point is, 1 lakh is income and growth is 10%. You got how much? 10,000 extra. But if your income is already 10 lakh, right? If your income is 10 lakh and you are getting 5% growth rate, right? So how much you are going to increase? 50,000. Right. So at a point of time when the volume is going to rise, the percentage growth rate is going to decrease. percentage growth rate, it is going to decrease. Target RBI is saying that approximate 1,25,000. That means I was near to the fact. Okay, fine. So the thing is, Rajan's point was that India's economic growth rate, which is riding very high, like 10%, 9%, at a point of time somewhere around in 2012-13, after that, India's economic growth rate is going to be stabilized somewhere around 6 to 8% again. But if with this economic growth rate we are going to have keep high inflation, it is not going to add a real income in the hand of common people. So it is a valid thing. We have to focus on what? We have to focus on controlling the inflation also. But at that point of time, Dr. Rajan was not part of the policy domain. He published his book, right? In 2007 6 7 he published his book, and his book got very fame because of the things what he have predicted in his book. All kind of the crisis we have seen in 2007-8 financial crisis, all these things he already predicted in his work, right? Then he was appointed chief economist of the IMF. So he came in the limelight, and then he was assigned for government of India's work. He was assigned as the chief economic advisor to the government of India, and he was appointed as the Reserve Bank of India governor. During his tenure, he formed videos available. He appointed a committee, and his question was, should RBI focus on inflation targeting or not? Committee, with the positive intent, committee said that yes, we have to focus on inflation more rather than just focusing on growth rate. And then RBI and Government of India came with the monetary policy framework in 2016, and under that framework, few things was decided. First thing, now consumer price inflation. Consumer price inflation will be considered as a target for inflation, and this will going to be 4% plus minus 2% bracket. And this framework, monetary policy framework, will exist for 5 years, then it will be revised again, and under that RBI have to make sure that inflation should be in the bracket of what? 4% plus minus 2%. But because RBI's uh, Reserve Bank of India Act 1934 do not mention such kind of the thing, inflation targeting and all, so that is why a legislation was required. Government have brought an amendment to the Reserve Bank of India Act, and under that amendment, things were included like inflation targeting. So from 2016 onwards, RBI became an inflation targeting central bank. Why RBI is an inflation targeting central bank? Because right now, Reserve Bank of India have the target, and that target is what? That target is to control inflation. The target is to control inflation, and inflation must be in that bracket, right? So, in that way, if we can see India's overall economy from 1947 till then date in terms of monetary policy formulation and execution. So we can divide into two parts. One is from 1947 till then April 2016, and from April 2016 onwards when RBI became an inflation targeting central bank. Right. So in the present context, this definition, this definition of what? This definition, this is the official definition. Right. The policy under which supply of money is regulated to control inflation while keeping the growth rate in the mind. Right. So growth rate will remain in the mind, but you have to control what? Control the inflation, right? So I hope this point is clear why RBI is an inflation targeting central bank, right? Now, as the situation of inflation is going to change in the economy, right? The situation of inflation is going to change in the economy. RBI accordingly going to take certain policy stance, right? Like it's like a game of cricket. Fine. So in the game of cricket, what happened when batsman will come to the crease, right? So he is going to take a stance, right? Maybe the leg stump or middle stump or the off stump, right? So stance is going to decide, means most of the time batsman's stance is going to show what kind of the batting he is going to do, right? Means where he is going to take the line. Some batsmen will prefer to play the shot in the leg side, some batsmen prefer to play the shots in the off side, right? Or sometimes, means stance is going to show what is the intent of the batsman at that point of time. Similarly, according to the inflationary situation in the economy, RBI is also going to take measures, right? Whatever will be the inflation in the economy, RBI is going to take certain measures, right? Because inflation control is the primary objective of the Reserve Bank of India. But at the same time, you also have to keep growth rate in your mind, right? So two things. First, what we have to do, control the inflation, right? Control the inflation with what? Having growth rate in the mind. So actually, see, there is one growth. One here growth rate means economic growth rate. Okay. So one growth is like you are having GDP growth rate of 9%, at the same time your economy is also having inflation of how much? Inflation of 8%. Whereas one country having the GDP growth rate of what? GDP growth rate of 6%, and inflation is also somewhere around 4%. Right. So we want inflation under control, but at the same time, we want GDP growth rate should be somewhere around 7 to 8%. So this is what we want to achieve. 4%, it may be somewhere around 5%. So 5% inflation and 7 to 8% GDP growth rate is going to be ideal situation for country economy like India at present. If the inflation is somewhere settling around 5%, right, at the same time we are also heading with the GDP growth rate at 7 to 8%, this is going to be the ideal situation. But ideal doesn't exist. We always try to reach, but it doesn't exist. Okay. So the point is, if inflation is rising, then RBI is going to think how to control the inflation. At the same time, how we have to maintain the GDP growth rate, right? If inflation is going to 6%, if inflation is going to 6%, then RBI is going to say that okay, let's focus on inflation, and if to control the inflation, maybe GDP growth rate is going to hurt, but anyhow we have to control the inflation. So this is going to be the philosophy of Reserve Bank of India, right? But if inflation is going to be what? 7%, then RBI will say that maybe growth rate is going to hurt, let that hurt, but we have to control what? Inflation as a primary target and only target as of right now. GDP growth rate, we will see it later, but right now we have to completely focus on what? Controlling or taming down the inflation. So you can see that when the inflation was at 5%, RBI was more focused toward the GDP growth rate. Okay, let's try to increase from 8 to 8.5 to 9%. Even if the inflation is going to increase from 5% to 5.5%, let it be, but try to push it from 8% to 9%, right? We will try for it. Let's try for it. So this is one stance. So RBI is not too much worried about the inflation, whereas when inflation is going beyond 5.5%, RBI will say that ki, no, 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 no. Now we have to focus on what? Inflation. When it is going to beyond 6%, 7%, then RBI is going to say that ki, now the time has came, we have to even focus on what? Inflation, right? So when RBI is going to be completely focused, when RBI is going to little bit lenient, or RBI is going to be more lenient, so in that way certain policy stance are being nomenclature you can find in the literature, hawkish stance, right, or neutral stance, right? So these stance are basically what? Whatever the terminology is there, you should not worry about the terminology. Just try to get the literal meaning of terminology. For example, hawkish, right? So hawk, right? Hawk means eagle. It is always going to what? It is going to be only on its target, right? And in order to grab that target, it is ready to do anything. So similarly, RBI become hawkish means RBI is completely going to focus on what? RBI is completely going to focus on inflation, right? Whether it is going to hurt means on whom the hawk is eyeing right now, it is going to grab it and kill it and eat it, right? So hawk is not going to care ki no yaar, we have to take care, we have to go for non-violence. It is not like that. Hawk is going to kill that prey and going to eat it, right? It is not concerned with what is else going to happen. Similarly, once RBI is going to become hawkish, whatever the GDP growth rate is going to tumble or the problem is going to happen, now our target is what? Inflation. So similarly, neutral stance means okay. Neutral, like neutral means what? There is a term neutral and neutrality, right? Neutrality means what? I don't care what is going to happen, like India, China and Russia, right? India, China and Russia. So when China attacked on India in 1962, right, Russia become neutral. Russia become neutral, and it is said that ki both are friend of USSR, and we hope both countries are going to resolve their issue on their own, right? So Russia become neutral. Neutrality means ki doesn't matter, even if you want to take a stance for particular party, you cannot. For example, the case of Switzerland is a neutralized country, means even Switzerland want to participate in the war, it cannot participate because it is neutralized by the treaty. So under the treaty obligation, you are neutralized, you are not allowed to take the part in any kind of the war wherever it is going to happen, right? So they cannot take a side. Neutral means as of right now I am okay with that. As of right now I am okay with that, I am not very worried what is going there. So when RBI is going to be having a neutral stance means RBI indirectly want to say that ki, okay, if certain point of inflation is going to rise, we are not worried about that because growth rate should be increased in order to provide more employment, income, consumption in the economy, right? So in that way RBI went little bit neutral stance. But when RBI is going to become hawkish, right, then it is going to be like what? It is going to be like completely focus on inflation. So as of right now, if you will see, nobody is saying RBI become hawkish, but it is clearly not Reserve Bank of India, but all over the world, central banks become hawkish towards what? Inflation. They are focusing on what? Inflation. For example, when Federal Reserve have started increasing the interest rates, right? Last time when they have increased the interest rate, many industrialists, including Elon Musk, they said that that kind of the rate hike by the central bank, it is going to increase the recessionary risk in the economy. Why recessionary risk? Interest rates are going to increase in order to decrease the inflation. Reduce the money supply, okay? Reduce the money supply so that inflation can be put down, right? For this purpose, they have increased the interest rates, right? So money availability is going to decrease. But when the money availability is going to decrease, demand side and supply side is going to have less liquidity, means less demand, less production. So in that context, maybe recession can be there. But despite all these suggestions given by the various economists and industrialists, their central bank, that is US Federal Reserve, they have not paid any heed to that, and they keep increasing the interest rate. Similarly, in India also, certain policy makers like government finance department, right, and some other policymakers, they showed their concern ki if in that way the interest rates are keep rising, then maybe India will also face a kind of low economic growth. But central bank is very adamant they are going to increase the interest rate in order to tame the inflation. So in that way central bank change their stance. So how to understand what kind of stance is there? You should realize ki what is going to happen, right? What is happening right now? Accordingly, RBI is going to change this stance, right? So there are the many stances, right? I hope what you have to do, just see the term, literal term, go to the dictionary, what is the meaning of that literal term, and try to understand in the context of the situation, right? If completely towards growth or completely towards what? Accommodative. Another term, accommodative. Okay, fine, no issues. We will accommodate whatever the money supply is increasing. We are accommodating that thing. Inflation can be accommodated. No need to worry. So when RBI is completely in the line of focusing on GDP growth rate, for example, when the pandemic was about to over, not about to over, not pandemic, but due to pandemic lockdown. So post unlockdown, once the unlockdown process happened, RBI become accommodative in order to push the economy. Right. Now RBI become what? Hawkish. So in that way we understand these stances of the central bank in the Indian context or in any other country's context. I hope this point is clear. Is it clear? What instances means? What instance is going to be taken? Okay. Okay, fine. Now, another term related to monetary policy is expansionist monetary policy, right? Expansionist monetary policy. Expansion means keep rising, keep increasing. So expansion, right? Increasing. So expansionist monetary policy means what? RBI is going to increase the supply of money in the economy. So that for that context, the term is used expansionist monetary policy. Fine. Whereas contractionist, contraction means narrowing. So contractionist means RBI is going to decrease the supply of money. So one is expansionist, contractionist. So contraction means what? You are going to decrease, right? Decrease the supply of money in the economy. I hope maybe you have heard the term tapering. Tapering. So tapering is a term which become very popular, especially in 2013. Tapering. Why this term came into the picture? In 2007, global financial crisis started, right? In order to save the economy from this crisis, because this financial crisis has created a situation of recession, right? So in order to save the economy from the recession, Federal Reserve in USA, it became accommodative and started pushing more and more money in the economy. So how RBI or Federal Reserve is going to put the money in the economy? Economy needs money, and Federal Reserve, they started bond purchasing program. Now what is bond? Bond is a paper through which anyone can raise the loan. So Federal Reserve says that ki we are ready to purchase the bond. So Federal Reserve is going to purchase the bond, and while purchasing the bond, you have to give the money. So suppose that I am having a bond and you are a person going to purchase my bond. So in that bond, I am going to promise ki this bond paper is having the worth of 1,000 rupees, and if you will purchase, I'll take it back. Purchase it back from you after 1 year by paying 1,100 rupees. So my bond paper is having the value of 1,000 rupees, and after 1 year, I'll take it back from you by paying 1,100 rupees. So that bond paper today you are going to purchase from me. So you have to give me the money. So if Federal Reserve is going to purchase that bond, Federal Reserve have to provide the money. So this scheme was started by the Federal Reserve from 2007-8 onwards, right? And keep going on, keep going on, keep going on. At a point of time when US economy starts showing the recovery, right? Then Federal Reserve realized that if we'll keep selling, keep purchasing this bond, then unnecessary extra money will be there in the economy and inflation can rise. So they announced that we are going to decrease the bond purchasing program. For example, on quarterly basis, they are purchasing $80 billion worth bond. $80 billion worth bond they are purchasing on quarterly basis. So they said that now we are going to purchase not $80 billion but $60 billion from next quarter onwards. Then we will decrease it to $40 billion. Then we will decrease it to $20 billion on the quarterly basis. This is what we are going to do. So they are going to slice it. So sometimes when there is a sharp corner, right? There is a sharp corner and we have to make it like this, smooth corner. So we start cutting in such a way and fine tuning. So after cutting and fine tuning, we can make it smoother. So this part is going to be what? Removed. So this is called tapering. This is called tapering in the normal term. But this tapering is done by the Federal Reserve from $80 billion to $60 billion to $40 billion, then $20 billion. So you are fine tuning. You will remain purchasing. You are going to purchase, but you are going to fine tune it. So this is why the term tapering was used. And under the tapering, they started decreasing the supply of money in the economy, right? So that tapering has effectively reduced the supply of US dollar in the economy, in US economy, right? So certain times certain innovative word will be there, right? For example, another term, capital flight. Capital flight, capital flight, capital flight. All the newspaper last 3 to 4 months, every day you are getting this term, capital flight, capital flight, capital flight. Many students dropped a message, ki, sir, what is capital flight? I do not understand which kind of the flight is there. So capital flight means foreign investors, they saw that the Indian economy has huge prospect of growth. So if I am going to put my money in the Indian economy, my money will also grow with the growth of Indian economy. With that objective, people are putting their money in the Indian economy. But what we have seen that we found that inflation started rising in India from last year October onwards. Inflation start rising. Then fuel prices start rising, right? So inflation and fuel prices are rising. That means growth rate is going to decrease. And at the same time, war started, and because of war there is a kind of possibility of what, because of war the fuel prices are further going to rise, right? So in that way, the investors who are investing their money in the India, they started pulling out their money. One reason. Another reason, US is also increasing their interest rates. So rather than investing in the India, where the interest rates are still low in comparison to the US interest rate, US government, US Federal Reserve is increasing the interest rate. So take money from here and invest where? In US. So those foreign investors who are investing their money in the India, they started taking out their money and they started investing in the US economy. So this is why the term capital flight become what? Popular. Right. Now, why I am telling you? I am telling you because most of the time, if you are very clear with the concepts, you are very clear with the concepts, like when RBI is going to increase the money supply, when RBI is going to decrease the money supply, what is appreciation of the rupee, what is depreciation. If you know all these basic fundamental terms, it is going to be quite easier for you to understand such kind of the new innovative word which are day by day is used, and that scares you from the subject itself. Subject, those students who have the basic clarity in the subject, for them it is not going to very difficult. But if you lack the basic understanding, basic terminology you do not know, then it is going to very difficult for you, right? So this is what I just want to let you know before starting this, the tools of monetary policy. Because many times students, sir, what this term means, what that term means. But if I am going to ask, what is repo, what is reverse repo, what is MSF, they are not able to understand or they are not able to explain. So first, please focus on the basic terminologies. If you are clear, then half of the job is done. Even if you are going to read that article clearly where they have mentioned some technical term, you will easily understand, because I understand. So I'm nothing special. Maybe I have multiple time read that thing. That is the only advantage I have over you. But I also understood in the same way. So why you cannot? Right. So please have a self belief. Number one. Number two, basic concepts are most important. Try to understand, learn, revise again and again. So that is going to give you the confidence. Right? Now, so I told you about what the monetary policy, types of monetary policy. One is expansionist, one is contractionist. So tapering went for what? Contraction. You are going to decrease the supply of money. In that context, the tapering word was used. Though they can use the term contraction, but no, they went come with the another new word, na, tapering, and that started confusing the students. Sir, what is a tapering? What is tapering? Are simply it is contraction. You are going to decrease the supply of money. Okay, so in that way, we have two kind of the monetary policy. One is expansionist, other is contractionist. Now, another way of defining monetary policy is, one is now monetary policy tools. Monetary policy tools. Tools means what? Okay, either we have to go for this one, which one? Expansionist, or we have to go for contractionist. Either we have to go for expansionist or we have to go for what? Contractionist. Right. Contractionist. Right. So contractionist, you have to decrease the supply of money. Expansionist, increase the supply of money. But how? The answer is tools. We are going to use certain tools in order to what? In order to increase or decrease the supply of money. And basically there are two kind of the tools. One is quantitative tools, another is qualitative tools. Quantitative, and again with the quantitative tools, right? Since beginning I have started this teaching, I keep telling the students that there are the two type of the tools, quantitative tools and qualitative tools. And when US federal, right, US federal used this thing, increasing the supply of money, and they used the term, we are going for quantitative easing. Quantitative easing, the term is used, and again messages call, sir, what is quantitative easing? This term is used in that article, I am not able to understand, please explain. अरे गधे, बताया तो था क्लास में quantitative tools, right? Quantitative tools. So their Federal Reserve is going to use quantitative tools. Easing means what? Freeing something. Go for freeing something means central bank is there na. So if it is going to ease something at your ease, relax at your ease. For example, your officer called you in his chamber and he said at as your ease, it means what? Be relaxed. So central bank is holding the money, right? And it is easing. Easing means what? It is going to increase the supply of the money, right? So quantitative easing, quantitative tools are going to be used for increasing the supply of money in the economy. That is quantitative easing. No, but unnecessary scared about the terminologies. If you have the basic things in your mind, it is not going to scare you. I'll tell you very clearly. Bull bear trap. Lot of interesting name. Okay. Bull bear trap. Quantitative easing includes repo rate, reverse repo rate, CRR, SLR, OMO, MSF. Qualitative means variation in the margin requirements, direct action, moral suasion. Yeah, absolutely right. Absolutely right. You're absolutely right. But there is another way to understand it. Like quantitative and qualitative tools. It's very simple. No need to just all this trying to memorize all these things. I have this water bottle in my hand, right? 750 ml. 750 ml is the quantity of water in this bottle. So if I have to increase, right? If I have to go for quantity, increase in the quantity, I have to increase the size of this bottle from 750 ml to 1000 ml, 1500 ml, or 2000 ml. In that way, this bottle is going to accommodate more water, right? Quantity wise, right? Quantity wise. Whereas if we want to control the flow, if we want to control the flow, what we can do rather than increasing or decreasing the size of this bottle, we can change the size of the mouth of this bottle. If the mouth is of this size, lot of water can come and go outside as ease. Very easily, lot of water can come inside. Lot of water can go outside from the size of the mouth. But if we are going to decrease the size, like a size of needle, we are going to decrease the size of mouth of this bottle to the size of needle, and that bottle still have 2 liters of water. Is it going to come out easily? No. No, it cannot be come out easily. It is not going to be come out easily. Doesn't matter how much water is being there. So one is going to ensure quantity and another is going to ensure flow. One is going to ensure quantity, that is quantitative tools. They are going to ensure quantity. Whereas qualitative tools are going to ensure what? Smooth flow. Flow will be there, easy flow, right? So this is why we use quantitative tools and qualitative tools. Generally, quantitative tools are more effective, quantitative tools more effective in order to change the situation of liquidity in the economy on immediate basis, right? Whereas qualitative tools are generally do not change on the frequent basis, right? First quantitative tools, then qualitative tools will come into the picture. Means if we want more water in this bottle, right? So first we have to increase the size of the bottle, then accordingly we will change the size of mouth of this bottle. If we want to decrease the liquidity, then we are going to first decrease the size of the bottle, and then we are going to decrease the size of the mouth of that bottle. So in general, if you will see, qualitative tools are being followed by whom? Sorry, quantitative tools are followed by qualitative tools. So first quantitative tools, then accordingly certain announcement will be there in order to make quantitative tools more effective. The qualitative tools are going to be used, right? Yes, BBT is exactly right. Will be a trap. Short name for you is BBT. BBT is one of my favorite web series or TV series. You can say not web series. Sorry, it's a TV series, Big Bang Theory. Right. So for you, the short name is BBT. So BBT is absolutely right. Quantitative or the general credit. Qualitative is selective credit control. Right. So I hope you understand you understand this quantitative and qualitative. Just quickly say, give me your comment so that I can proceed further. Okay. So now we have to move towards where tools means I have explained you about the tools. Now we have to understand present day structure, how the monetary policy is executed, all these things we have to understand here. And for that I have just compiled a PDF. Basically it is from Reserve Bank of India's website. Most of the thing you are going to find there, but I have did some editing here, right? Some editing here for make this thing more relevant and more clear for you, right? So monetary policy function. So now I'm focusing our discussion. I told you na ki monetary policy from 1947 to 2016, but from May 2016 certain changes were made, and in that context I am going to explain this thing to you. So monetary policy function of Reserve Bank of India, right? Under the Reserve Bank of India Act 1934 as amended in 2016, Reserve Bank of India is entrusted with the responsibility of conducting monetary policy in India with the primary objective of maintaining price stability while keeping mind in the objective of growth. And here, as I mentioned you, I have explained already from 2047 to 2016 and monetary policy from May 2016, right? So government and Reserve Bank of India agreed for conduct of monetary policy under certain rules and regulations, which is known as framework, right? And that framework was legal thing, means that framework initially they agreed ki okay, these are the things that should be the base for the monetary policy, and that is known as a framework. And then that framework got a legal statute known as framework agreement, right? So in May 2016 RBI Act 1934 was amended, legal, right, to provide statutory basis for the implementation the flexible inflation targeting framework, right? So framework agreement, inflation targeting. Now section 45ZA, the central government in consultation with RBI determines the inflation target in terms of consumer price index. Means now inflation, that consumer price inflation is a legal statute. Means even if RBI want to consider any other thing as an inflation, they cannot. Even government of India cannot direct RBI ki no, 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 this is not the right way of evaluating the inflation, this is the right way. You can't do that thing because it is mentioned in the act. If you want first change this act, then you can mention any other XYZ index. Right now it is mentioned what, consumer price index. So neither RBI nor government of India can deviate from what, consumer price index. If they want to shift to any other index, they have to change in this law, right? Okay. Acha. This agreement is for 5 years and notified by the official gazette. What 5 year means? After 5 years, what will be the target under consumer price index? That is going to be discussed. Consumer price inflation will be remain there, but what will be the target? For example, initially when it was signed from 2016 to 2021, the target was what, 4% plus minus 2%. Then again in 2021 it was decided ki let the target will be remain same, 4% plus minus 2%. So after every 5 year, this target is going to be discussed and mutually fixed with RBI and Government of India in the consultation each other, right? But it will be remain what? Consumer price inflation until unless you are going to make certain change in what? Section 45ZA of Reserve Bank of India Act 1934, right? Yes. BBT is saying that this was a contraction of the tightening monetary policy rate increase. Yes, absolutely right. Accordingly, on 5th of August, Central Bank notified the official gazette for percent consumer price inflation as the target, right? And on August 5th, they did that thing, all these things. Acha, the important thing, failure of maintaining inflation target. Suppose what the target is set 4% plus minus 2%, right? If the target is failed, the central government has notified the following as a factors of constitute failure to achieve the inflation target. The average inflation is more than upper tolerance level of the inflation target for any 3 consecutive quarters means generally if financial year is divided into 4 quarters, so back to back 3 consecutive quarters, if inflation is going to be what? Inflation is going to be upper higher limit. That means suppose right now means from May, June, April to June, July to September, October to December. Suppose 2022. In 2022, from April to June, then again July to September, then again October to December. If 3 consecutive quarters of economy, if inflation is going to be more than what? 6%. More than 6%. More than 6%. In that case, we can say that the inflation target is failed. The average inflation is less than the lower tolerance limit for any 3 consecutive quarters. So, if any consecutive 3 quarters, the upper target or lower target is not being achieved, then it is considered as failure to maintain the inflation target. Okay, failed. You are failed to manage the inflation target. So it is defined when the failure is defined. The failure is defined like if you are going to get less than 33%, then you are fail. If you are going to get 33% or more than 33%, you are pass, right? So similarly, first we will check whether you are failed or not, and how we will decide consecutive 3 quarters of economy. Then we will decide whether the policy is failed or not. Okay, we found policy is failed. What next, right? Like if your report card is showing to be what? You are failed, then father is going to beat. Right? So in that case, if RB is going to fail, right, then what happen next? If RB fails to meet the inflation target, it shall set out in a report to central government. What? The reason for the failure to achieve the inflation target, remedial action proposed taken by the bank, means Reserve Bank, an estimate of time period within which the inflation target shall be achieved, pursuant to timely implementation of the proposed remedial action. Means here you are going to fail and father is going to say that ki, okay, tell me what are the reasons why you have failed, and you are going to say that ki, father, I have not studied properly, and in this way I'm going to study properly, and by that particular point of time I am going to prepare, then I'll rewrite the exam and I'll clear this exam. So this is kind of what very easy terms and condition they are going to let you. Okay, fine, go and study. Generally, this thing do not happen in our families, right? If in any case somebody is going to fail, most of the time, first reaction is going to be what कि और मोबाइल में घुसे रहो और टीवी देखो और ये करो और वो करो. Lot of things are going to be told by the parents. It doesn't matter at what instance you are going to fail. Most of the time, directly or indirectly, they are going to put the blame on other things you are doing, right? Other things you are doing. But here, like a very good parent, okay, 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 okay. I hope this PDF is visible right now again. So RBI have to do these things. Not any kind of harsh action is going to be taken against the Reserve Bank of India. Only these three steps have to be taken by the Reserve Bank of India. Acha, the operating framework of monetary policy aims at aligning the operating target, the weighted average call rate. Weighted average call rate. Okay, so I have highlighted this term, but as of right now, I'm not going to explain this term. I'll explain this, but go to explain this term, the entire discussion topic is going to be in the other direction. Okay. Is it happening very frequently? Because in the last class also we are facing this issue. Frequently this screen is going to be blank and again this screen is going to be blank. Is this happening again and again? Okay, I'll talk to Ashok sir today. Means after this class, I'll talk to him and I'll ask them to talk to this Vimeo team why this is happening, because this should not happen, and especially it should not happen on very this frequent basis because it's quite irritating. I will discuss Ashok sir. Okay. Okay, now, so what I'm trying to say that ki what is call rate, first you have to understand, then you will understand what is average, weighted average call rate. Call rate, maybe certain of you know that what is call rate, right? But right now I'm not going to focus on this thing. First I'll go through with the monetary policy, but I will open this PDF and I'll explain the call rate. Now I'll open this PDF and I'll explain you this thing in the brief again, right? So as of right now, they have mentioned the operating framework of the monetary policy aims aligning the operating target with the policy repo rate through proactive liquidity management to facilitate transmission of repo rate change through entire financial system, in which it turns the influence aggregate demand a key determinant of inflation targeting. Just as of right now, please ignore this because it is a crux of monetary policy, right? It is a crux of monetary policy, and we are just going to understand, right? So, as of right now, please ignore these lines, just go forward and understand the rest of the thing. Then again, we will come back on these lines and I'll explain you these lines in the detail as I'm explaining each and everything. I hope you will trust me, right? So, Monetary Policy Committee. I like again. I will explain. Okay, I will back on this lines. So, Monetary Policy Committee. Committee means Section 45 ZB RBI Act provides a constitution of six-member Monetary Policy Committee. Why committee? Because earlier it was RBI governor plus four deputy governor. They comprise a monetary policy committee and they decide. And in that five members committee, which is going to vote, that was before 2016. Before 2016, five-member monetary policy committee was there. That is an internal committee of Reserve Bank of India, and governor was having overriding veto power. Right. If suppose that four member are saying that ki we have to increase the repo rate, but governor is saying that ki no, we have to make it remain same. So governor can use the veto power. Right. So governor can use this veto power. This is was the configuration before May 2016. However, under the framework agreement signed between the government of India, it is said that now this committee of internal committee of Reserve Bank of India will be replaced by a permanent six-member monetary policy committee to determine the policy rate. To determine what? Policy rate. So if you will go to the Reserve Bank of India's website, right? If you will go to the Reserve Bank of India's website, see, if we can see here, if we can see here, there is a policy rate. There is a policy rate. Under the policy rate, you can find that it is mentioned what? It is mentioned policy repo rate, standing deposit facility, marginal standing facility, bank rate, fixed fixed reverse repo rate, right? So under the policy rate, and there is reserve rate, right? Reserve ratios and policy rates. So monetary policy committee, the monetary policy committee is responsible only for what? Monetary policy committee is responsible only for policy rates. That means they do not have any statutory power or to dictate Reserve Bank of India in terms of what will be the CRR, what will be the SLR. They do not have this statutory power. Their statutory power is limited with respect to only what? Policy rates. Policy rates in terms of the repo rate, standard deposit facility, marginal standing facility, bank rate, fixed reverse repo rate. What are all these? I'll explain just for your clarification. This is the thing what RBI means Monetary Policy Committee can go for it. Okay, now back to this PDF. Section 45 ZB amended and 6 empowered member. 6 empowered member. 6 empowered member are there, right? Empowered member to constitute what? To constitute monetary policy committee, right? And these 6 members are who? The governor, who is going to be the ex officio. So earlier he was a chairperson only. Now he is what? Ex officio. What is the ex officio means? Right? Like in earlier planning commission, when the planning commission was there, prime minister was ex officio chairman of the planning commission and there was a deputy chairman. That means at that point of time when the planning commission was there, so planning commission's head is prime minister, but prime minister do not involve in all these things. He will chair the meeting, he will facilitate the meeting, he is not going to involve in all those things. With that thing, the ex officio chairman, for example, vice president of India, vice president of India is chairman of Rajya Sabha, but he actually functions as an ex officio chairman of the Rajya Sabha because he is not a member of Rajya Sabha, but he officiate the Rajya Sabha, right? The chairman of Rajya Sabha. That is why he's an ex officio. So when the term ex officio is being used, what it means that? It means that you are going to run that affair, right? You are going to see all the functioning in each and everything. In general, you are not supposed to be part of it. You are not supposed to be part of it. You are going to facilitate that thing. But at certain point of time, if required, you can intervene, you can dictate. First thing, you have to facilitate, but at a certain point of time, if it is required, then you can dictate also. So in that way, the ex officio chairman of RBI, right? Then the deputy governors of Reserve Bank of India, they are member, right? They are member. Again, ex officio, right? So ex officio, one more meaning of ex officio means what? For example, Shaktikant Das, who is a chairperson right now of the Reserve Bank of India, right? In that context, what it means that he is going to be remain chairperson till then he is going to be the governor. Once his position of governor, he is going to retire from the Reserve Bank of India's position. He is not going to be the part of that committee. He is going to be the part of committee only till then he is a governor, right? So in that context, the ex officio chairman is used, right? But again, the literal meaning of ex officio means what? The literal meaning of ex officio means you have to officiate. You have to officiate but not participate. Here there is a contradiction. They are mentioning every RBA official is ex officio. Right. Every member is what? Ex officio member. The every member ex officio means like Rajya Sabha chairman, he is an ex officio chairman of Rajya Sabha. Means he cannot participate. Means he cannot vote there. Rajya Sabha chairman cannot vote because he is not part of the house. So the classic meaning of ex officio in the political domain, ex officio means you can participate but you cannot vote. Here they are mentioning ex officio for everyone. Every person from Reserve Bank of India, they are mentioning what? Ex officio. Ex officio. Right. So ex officio from RBI ex officio, it means that they are part, right? They are the part, but they are part till then they are holding the position of governor or deputy governor. So here the ex officio term is used in the limited context. In the limited context, when they are using this term, what? For the deputy governors of whom? Deputy governors of Reserve Bank of India and one official of Reserve Bank of India. Right. So here the term is used in the limited context. Limited context means what? Ki they are part and they can vote. They are a part, they can vote. Where governor is a part, but governor cannot vote in first instance. He can vote only when there is what? Tie of the voting. Right? So those people who are also preparing for the civil services, they keep this thing in the mind. The exact meaning of ex officio do not apply here, especially in the context of whom? Deputy governor and one officer of Reserve Bank of India. Right? Now, so governor, deputy governor of Reserve Bank of India in charge of monetary policy, ex member officio, one officer from the Reserve Bank of India to be nominated by the central board, again ex officio. Whereas remaining three members are going to be what? Remaining three members are going to be appointed by whom? Appointed by the government of India. So these three members, remaining three members, like all these three members, they are appointed by the government of India. They are not nominated. See the difference. Here they are mentioning they are nominated by Central Board of Reserve Bank of India. Central Board of Reserve Bank of India, 1 plus 4 plus 4 plus 2 plus 10. 10% nominated by the government of India, two government official, four directors, regional directors, four deputy governors, and one governor. These people will create what? These people will create this Central Board of Reserve Bank of India, right? Whereas if you will see these names, right, these names, members, and members. Member referred at 4 to 6 above hold the office for the period of 4 years until the further order, whichever is earlier, right? And they are not allowed for reappointment, and they are appointed. These members are nominated. What is the difference between nomination and appointment? Nomination means a general consultation among the board and they are going to apply it. But when is the appointment? Actually, how they are appointed? For the appointment of these three remaining members, Reserve Bank of India governor and secretary to the Ministry of Finance. They are going to make a committee, search cum selection committee. So they will form a committee under the chairmanship of the governor. But apart from governor, finance secretary is also in that committee. So these people are going for search cum selection committee. So they are going to recommend that name, and on the basis of recommendation of that committee, which is comprised of governor of RBI and finance secretary, on the recommendation of that committee, these three members are appointed. So government of India cannot appoint any Tom, Dick and Harry in that. They have to appoint only those three people, which is recommended by search cum selection committee under the chairmanship of whom? Governor of Reserve Bank of India. Right. So in that way, these members are appointed. Fine. Once the committee is being set up, remember that these members are not eligible for reappointment. These three members who are coming from outside of the RBI, they are not being allowed for reappointment. MPC determine the policy rate, right? I just explained you what is the policy rate and the reserve rate. So CRR and SLR, these two things are out of preview of MPC. MPC can go for only what? Policy rate, right? They can go for only policy rate. MPC is required to meet at least four times in a year. Four times in a year you have to meet, right? That means you can meet after every 3 months. But since its inception, Monetary Policy Committee is meeting after every 2 months, right? 60 days. With the difference of 60 days, they are meeting. But as per the law, they have to meet at least four times in a year. That is on quarterly basis. But as of right now, what they are doing, they are meeting every 2 months. Another thing, quorum. The minimum number of members are required to initiate the meeting. That is quorum. The minimum number of members are required to initiate the meeting. The minimum number of members required to initiate meeting, right? This is known as what? This is known as quorum. So the quorum is four members. So at least four members we need in order to initiate that meeting. Yes, bi-monthly. Now, each members of monetary policy have one vote, and in the event of equality of votes, governor has second or casting vote. Casting vote means you can vote only when there is a tie, like Lok Sabha speaker, speaker of Lok Sabha, who is also member of Lok Sabha, right? So Lok Sabha speaker is also member of Lok Sabha. He cannot vote in the first voting going on and the vote are on equal, then he can vote. Only then he can vote. That is why it is known as what? Casting vote. So in the first instance, governor cannot vote. He can vote only in the situation when there is a tie. Okay. But there is a less chances of tie because three members, apart from governor, five members are having the voting right. So the situation of casting vote is going to be there when a person is not going to vote. Suppose that six members are there, one plus five, and out of that five, some one person is absent or he refused to vote, then there is a situation of tie, right? The situation of tie can exist. In that case, RB governor is going to vote, but highly unlikely situation. Highly unlikely situation for voting of the governor. Okay. Now, the instruments of monetary policy, right? The instruments of monetary policy, the first is what? Cash reserve ratio. First is cash reserve ratio. So, what is cash reserve ratio? I hope every one of you know that about the cash reserve ratio, but all scheduled commercial banks have to maintain certain amount of their total deposit, that is NDTL, in the form of cash with RBI on daily basis, is known as CRR. Again, read this definition. Actually, time is little bit over, but I'll finish this CRR only. Then I'll wind up this class. So please cooperate here. So all scheduled commercial banks have to maintain certain amount of their total deposit. That is NDTL. NDTL stands for net demand and time liabilities, NDTL, net demand and time liability, NDTL, in the form of cash, with RBI on daily basis is known as CRR. Suppose, what is net demand and time liability? Banks do accept deposits in terms of what? In terms of demand deposits and time deposit. Like saving accounts, normal saving accounts, you can deposit, you can withdraw at any point of time. Whereas FD and RD, they are example of what? They are example of time deposit. So net NDTL or NDTL is the net deposit, whatever you have received in terms of demand, whatever you have received in terms of time. So just take an example. Suppose that banks NDTL on 12th August 2022 is rupees 100. Is how much? It is rupees 100. Right? It is rupees 100. So out of that, at present CRR is 4.5%. So out of that 400 rupees, out of this 100 rupees, bank have to take 4.5 rupees cash, and that cash they have to maintain with RBI. Now, what is the meaning of with RBI? Means in the bank there is an account of what? There is an account of RBI. Bank A is there, and in this bank there is an account of whom? Reserve Bank of India. So this 4.5 rupees cash have to be put here, right? The account of Reserve Bank of India in the bank, and in that account you have to maintain that cash. Fine, you can maintain that cash. So some amount of cash must be there, and it have to maintain on what? Daily basis. Daily basis means tomorrow on 13th of August 2022, if it is going to be how much? Suppose that in this day deposit is going to be how much? From 100 rupees to 200 rupees. Then this account must have how much? 9 rupees cash. So in that way, banks have to maintain cash with Reserve Bank of India on daily basis. This is known as cash reserve ratio. So if it is 4.5%, that means rest of the money, that is 19.550, is available for other purpose. That means if we will increase the CRR, bank's ability to lend that money which they have received in terms of deposit. So banks are receiving the deposits. In that deposits, they have to maintain the CRR, right? They have to maintain the CRR, and once they have to maintain the CRR, only the rest of the money is available for them for what? Further investments. So if we are going to increase the CRR, banks liquidity is going to decrease, right? Liquidity is going to decrease means bank can lend less amount of money. So this is why it is said that liquidity is in inverse proportion to what? CRR. So if the CRR is going to increase, liquidity is going to decrease. If CRR is going to decrease, liquidity is going to increase. So in that way, CRR works, right? So banks have to maintain the CRR with RBI on daily basis is known as cash reserve ratio. And that cash reserve ratio is going to immediately, if it is going to increase or decrease, immediately the highest liquid money, that is cash. You have cash, you have gold, you have KVP. Suppose that a person is having what? Person is having 10 lakh rupees. Out of that 10 lakh rupees, he have 2 lakh cash. He have 2 lakh rupees cash, 3 lakh rupees FD, and 5 lakh rupees as KVP, Kisan Vikas Patra. So that 5 lakh rupees is there, but KVP is going to be mature in 9.8 years, and before that you cannot break it, right? You cannot use it. Whereas FD, again, you can break it, but it will take certain time and money is not going to be available immediately. Whereas cash is available, you can convert in that money whatever you want, whatever the things you want to purchase. So this is why it is highest liquid. So cash is highest liquid form of the money. So whenever the cash reserve ratio are going to be changed, it is going to be immediately and effectively going to change the liquidity situation in any side, whether the bank side or the public side. If the cash reserve ratio, they are highest form of the liquidity because it is have to be maintained in the form of what? Cash. So if RBI want to sudden dried out, RBI won't suddenly drying the liquidity because other things will take some time. Some time it will take. But cash reserve ratio, immediately it is going to dry down the liquidity or push the liquidity in the economy. But sudden changes are going to make economy unstable. So that is why CRR, if you will see, RBI generally do not touch the CRR in first, second, third instances. But once required, too much requirement is there, then it is going to be what? Touch the CRR also. So touching the CRR along with the other things, it is a kind of what? If RB is increasing the other rates and also increasing the CRR, so that is a kind of indication that RB is very serious about to consider, sorry, not consider, means RBI is very serious to decrease the inflationary rate. So the symbol means it's an indication. If RBI is also trying to change the CRR, it's an indication of Reserve Bank of India. It is either going to be hawkish or it is going to be accommodative. Means two kind of the extreme kind of the action is going to be taken by the Reserve Bank of India. Means RBI have on that track. Okay, now we have to completely decrease the inflation or we have to increase the money supply on an immediate basis. Only then they are going to touch the CRR. So when RBI has increased the CRR few months back from 4 to 4.5%, so it was an indication for entire market ki now be ready. We are going to take certain important measures in order to control the inflation and liquidity in the economy. Yes, CRR will come under the direct instrument. Why it will come under an indirect instrument? Why interest rate will be paid? Why interest rate will be paid? Money is remain with the bank only. Why RBI will pay the interest? RBI will pay the interest. Banks pay the interest to the customers only when they are going to use that money. You are going to deposit your money, and that money is going to be utilized by the bank to make certain investments, profitable investments. That is why bank is offering you the interest, and this is why banks offer the higher interest rate on FD and RD and less interest rates on saving accounts, because you can withdraw at any point of time. So it is going to create a problem for the bank, right? So this is the same reason why banks are not getting any interest, because money is going to be remain same with whom? Bank itself, not with the RB. So this is why there is no question about giving the interest rate to banks. Doesn't matter it is in the with the RBI. Okay, so here I am winding up the session. Tomorrow I'll explain what I told you here. Na? Here this term was used. This term was used, weighted call rate, average call rate. So I have just started explaining this CRR, and I'll explain you call rate in context of what? CRR itself. CRR itself, I'll explain this what Mr. BBT, have patience, go with the class pace. If you know all these things, I'll recommend you should go for the revision, right? Rather than attending those class. If you already know those things, better to spend the quality time while doing the revision, right? Means don't take it otherwise. Just an humble suggestion for you. If you know all these things, it is better for you to do the revision. If you are doing the revision with me, again fine, you can be the session. But if you are here to learn new things, just be with me. Don't try to behind with me or try to jump, because if it is going to be jumped by you, you are going to miss certain things, right? So I always feel that we have to go step by step. So I believe in the step by step learning, right? So this is just a suggestion. Rest is up to you, right? Be with the pace. First we will finish the CRR, only then we will go to the SLR, and once we will did with the SLR, then I will give you the comparison between CRR and SLR. So comparing with the SLR, it will be done only when the CRR is going to be over, SLR is going to be over. Okay. So the lesson in the purchase course are old, and should I currently stick to that static part or stat part with the current affairs as well? Static part with the current affairs, my dear. Static part, it's a see, it's a biggest problem. It's a biggest problem in this preparation in the subject. I'll tell you, when I explained on the same platform when I have explained all this monetary policy and each and everything, I have not explained the standard deposit facility. I have not explained the extended deposit facility. It came only after that. Now, this time I'm going to explain it. So it's very dynamic in the nature. So always recommended static part, plus keep an eye on the newspaper and current related things, so that you are going to learn in the better way. ESI current affairs, we are providing certain current affairs things now. What we are providing ESI current affairs, that is sufficient. Don't go for too many sources. The sources we are providing is the source, sufficient source. Keep revising. Do the revision. That is only thing. Understanding plus the revision. Right. Revision is more important rather than trying to cover too many things. Acha. Okay. Okay. I'll do that. I'll do that. Kindly schedule the current last 3-4 months. Okay. I'll do that. ESI related current affairs. I'll do that. Don't worry. There is no current affairs in the app. Acha, okay, okay. Aniket, I'll discuss with Ashok sir this issue, current affairs related thing. Okay, so today I'm going to wind up. Tomorrow I'll complete this monetary policy, and most of the thing I'll explain means tomorrow I'll complete going to explain this rest of the part of the monetary policy. Okay, so good night to all of you. See you tomorrow at 8:30. Okay.